What's going on, everyone? My name is D. Anthony with EvolutionTraders.com. We're going to be taking a technical analysis look at Tesla. I am a full-time options day trader, so what I'm going to be giving you guys is some levels that you can kind of mark out on your charts, set alerts for some scenarios, some things to kind of, be aware of, so that way you can profit to your maximum potential. So ever since losing the 50-day moving average here on this gap down on the 23rd of September, we see Tesla try to make a little bit of a recovery here with a dead cat bounce, a 3-day bounce into the rejection spot of the 50-day moving average before 1, 2, 3, 4, 5, 6, 7 consecutive red days. Tesla is running on a lot of news with Twitter, with Elon Musk, so forth and so forth. I tend to stay out of the news just due to the fact that whether it's good news, bad news, catalyst, one thing or another, it still has to break through my supply and demand levels anyways. So me being a technical analysis trader, the news can say or do or sway the charts. However, it still has to confirm for me to want to take a trade. What I'm looking at here is just a clear power trend down ever since losing this 5-day moving average on the 29th of September. You can see we tried to backtest it 1 time, 2 times, 3 times, getting rejected. All this is just a nice power trend down. Now we're in the middle of a channel range, top of the range being 254, bottom of the range being 211. This is a huge range here. As you do know, Tesla can move 5, 10, 15 points in a day. So it's about 2 to 3, 4 days worth of price action to go from up of the range to the bottom of the range, or from the bottom of the range all the way up to the top of the range. Now sitting right here down at the middle to bottom half of this range, if we do get any sort of bounce, any sort of dead cat, any sort of reversal, it's fine. If you're an experienced trader and you understand how to use the lower time frames, like the 2-minute or the 5-minute, even the 1-hour time frames, and you feel confident on your position sizing and your risk management to try to scalp a trade to the long side, if we do get some sort of dead cat bounce next week, go right ahead. But your bigger trend trade is letting it bounce, letting it some sort of consolidation happen, distribution 1-2 days, getting rejected yet again off of that 5-day moving average, and then taking your short position off the rejection of the 5-day moving average. Now right now the 5-day moving average is sitting at a price of around 239. So from a price of 224 currently up to 239 is a big spread. Allow it to bounce, get into this zone, consolidate, allow the 5-day moving average to kind of trickle down. As it trickles down, if it gets rejected, you can do one of 2 things. You can wait for it to take out today's lows and that be your entry for the short position, or you can try and take an early entry off the rejection of the 5 SMA, and you're going to use the 5 SMA as your stop. So for example, if we bounce, we consolidate, we test the 5-day moving average, and you take a short position, and the following day we close over that 5-day moving average, your trade is over. You have to exit the trade and cut your losses as that. As long as we continue to ride and stay below the 5-day moving average, you just continue to hold your trade to the downside. Now that level to the downside that you would be looking for the continuation of the flush is 222. Below 222 does have room all the way down to the bottom channel of around 212. So you still have about $10 more down to the downside, something to kind of be cautious of and kind of look at. If you are just trying to play the bounce and you would like to try to catch this bottom here, or try to attempt to catch a bottom, again, remember, we're never going to catch the bottom, we're never going to catch the top. But if you want to try to time it to the best of your ability, one thing that you can do is let it bounce, let it come down into this range between, I would say, around 210 to 215, and start adding position size there. If you're playing common shares, between 210 and 215 could be a potential good bounce spot, all the way back up to around 230 to 250. That's the range and the profit taking areas that I would look at. Again, look at your daily charts. If we take a quick look at the weekly chart just to kind of see where we stand on a 1-week time frame, you can see here, ever since getting rejected, again, we had a lot of multiple weeks here of consolidation at the 50-day moving average on the weekly time frame. We did try to attempt to take out the highs, was rejected, came down to the bottom channel level, and once we lost this 20 SMA, it's been 1-2 weeks straight down. The last level, major level of demand that we lost was the 100-day EMA, right? So we lost exponential moving average on the 100-day this week, and we still have room down to around 206, 207 on a weekly time frame before we hit this lower Bollinger Band, and we do have a price of around $200 to $201 on the 150-day simple moving average. Hope this makes sense. Again, guys, if you kind of just scroll back on the weekly time frame, you can see exactly where we are at now is into a lot of support here on Tesla. So just be careful if you're holding short positions. If you've been in a short position, make sure to lock in profits. Again, always hold a runner, because we do know our maximum potential of around 207 to 210. But just understand that it doesn't take much for this to quickly reverse, and you could be looking at a price of around 240 to 250 on Tesla in a matter of seconds. So with that being said, just understand, lock in your profits on the way down. If you would like to start a position here and try to play this bounce, what you would need to do is use this consolidation going all the way back to May, June, and July. This consolidation between 206 and a price of around 215 as your kind of support level. Now, if we do lose 206, 207, then you might want to think about getting out of the trade. But again, your macro support is going to be around 200. So anything below 200, definitely need to get out of a long trade. If you are trying to catch a bounce here, anything between 205 and around 210, 212 would be a good starter position. Again, only if you're playing commons. I really wouldn't try to bounce this on the option side. I would look at the smaller time frames and try to do it on a smaller time frame for the option side. Again, 222 is today's lows. Looking at the 1 hour candle here, we are trying to make a little bit of a recovery bounce here. Definitely no long play for me until we get back over 226, 227, and then I will look to try to take this to the long side between for a short-term day trade between 226, 227, and 230. Again, hope this helps. My name is D. Anthony with evolutiontraders.com. If you guys would like to know more about me or join the community, all of that information is down in the description box below, and I will catch you guys all in the next video.